Maureen, let me ask you this about governance within companies. There are a lot of companies, including the one that owns this network, that have various classes of stock that favor family control. Zuckerberg and his family holdings in Facebook. I believe the same kind of dual class structure is in News Corp. I think it is also in Google, if I'm not mistaken. I don't want to be quoted on all of these. But do those companies, for that reason, clear your hurdle for being clean and good on governance, or do you rule them out?
Well, I think you have to look at each company individually, and governance is a very important part of ESG. And ESG means a lot of different things to different people. But the governance aspect certainly does mean we have to look at the board and looking for diversity on that board. And diversity is not only female and male gender balance, but it's also diversity of thought, age diversification, many different aspects, and truly having, in a sense, what we would call an independent board and having that independence there as well. So to your point, I think some of the stocks that we are looking at as far as ESG is concerned may not be in the areas that you would think as well, just like Valerie said. So industrials, let's say, industrials are not thought of as being ESG friendly. But if you look at some specific names like Cummins or Deere, they're doing sustainability efforts to try and improve what they are doing in the market.
I was trying to get at the question of the dual share class structure and whether that is a sort of a red line for either of you, Valerie. Is it for you when you see that? Do you say, well, I can't really, in good conscience, put my capital in a Facebook because I don't have the voting power there?
The dual share class structure is definitely a challenge. However, it's a challenge that comes with the territory, so to speak, if you're going to invest in a lot of technology companies, because they do have that structure. I believe every single stock that you named has a dual share class structure. We look at 23 different variables when evaluating the effectiveness of a board, and that ranges from the independence of the board overall to the independence of specific committees, as well as the composition of the board and the diversity and skill. Also, refreshment of the board of directors is important. So while you have the issue of the dual share class structure, which is highly problematic, we look at governance a bit more holistically and also try to determine if, in fact, the board is behaving in a way that is aligned with the broad interest of all shareholders, and if we have confidence in that through our engagement with the lead independent director or other members of the board, then we're comfortable investing.
Shepard Smith here. Thanks for watching CNBC on YouTube.